Good morning, everyone. Today is Monday, April 18th, tax day, and I'm Marv Eisen of Timeless Dollar. And we're going to start the week, as we do every week and every day, as you should, looking at the economic calendar to see if there are going to be any announcements during the market open that are going to tend to move the market. And today there are two at 10 a.m. and 4 p.m., neither one of which is going to move the market. And let's move over to the morning news. Now, the market, of course, was closed on Friday for Good Friday, but the flags generally are in the red. Futures not highly in the red. S&P futures down 12, Dow down 31. Oil is up a bit, and the 10-year note is up a bit also. Not great bellwethers to cheer the bulls for the S&P. Equities move inversely to these two numbers. So let's move over now to the E-mini. You're looking at a chart from Thursday, and what I can tell you is when you look at an E-mini chart, at the beginning of the day, you really don't know anything other than where the market is trading at that moment and where the close of the previous day was. Now, where the market was trading at the moment was right here on Thursday, and where the previous close was right here. Those are the only two things you know. So there are three kinds of traders. Yeah, there are traders that make things happen. There are traders that watch things happen. And there are traders that don't know what happened. So which kind of trader are you? Well, we can rule out the first one immediately. Traders who make things happen. There are roughly 1,400,000 futures contracts traded on the E-mini exchange every day. And if you are trading 2 or 10 lots or 100 lots, you're not going to make things happen in the market in terms of moving the market. So you're not a trader who makes things happen. None of us are. Are you a trader that knows what happens? Well, that is, I'll suggest to you, that is the kind of trader you want to be. You want to be a trader who observes and knows what happens as it happens, because you can interpret the price action, the market moves, based on your metrics, your knowledge of the market, your experience, and your training. Then there are the third type of trader, the trader who sees what happens but don't know what happened. They just look at the chart, they see a chart, the prices move up and down, they take a guess, it trades against them, it trades with them, but they're clueless. Okay, so you want to be a trader who watches what happens and knows what happens. So let me suggest something to you. This is Thursday's chart, and you're looking at my trading zone calculation. And if you don't know what my trading zone calculation is, you can see some of my other videos. I'm not going to explain it on this one. This is Thursday's chart, and you can see the prices started out at one end of the trading zone, traversed to the other end of the trading zone. And I'm going to go back to Wednesday, April 13th. Here's another day with my trading zone superimposed on the day's chart, and the prices again traverse the trading zone. I'll go back another day to Tuesday, and here's Tuesday's chart. Prices started at one end of the trading zone, and prices traversed the trading zone till the end of the day. Now you can see this looking at my chart, but you have to know what happened. You have to be able to see it and interpret it as it happens in order to place intelligent trades. So let me suggest something to you in this video. The early morning, first hour or so of trading is the best time to trade, right? Well, it's also the most dangerous time to trade, because the first hour of trading is the time where markets are the most volatile and the price direction, the trend for the day, hasn't yet been determined. On Tuesday, April 12th, we can see the volatility in the morning. Then the trend developed, and throughout the day, we can see what the trend was and trade according to the trend. But the volatility in the morning, other than the gap trade, and the gap trade is, while it closes 75% of the time, it's still a guess as to whether it will trade. We don't really know. Let's go to the next day, Wednesday, April 13th. And again, the morning volatility, we see it. We don't know which way the trend is going to go for the day. So those traders who trade early in the morning based on, well, the volatility is best. It's the greatest time to make a profit. Yeah, it's also the greatest time to lose a profit quickly. So if you are a person who watches what happens and knows how to interpret it, you might want to avoid the first hour or so of trading. Wait until the trend for the day develops and trade based on your knowledge. Going to Thursday, and again, volatility in the morning, the market trends up for the first half hour, then down, then sort of back up, and then the trend establishes itself where you can see what happens and trade based on your knowledge of what happens. Plus, of course, you should have a trading zone. You should know and mark on your chart where the previous day's close was, and you should have an indicator. I use the stochastics, and if you want to know why I use the stochastics, I'll explain it in my course very vividly. And for those of you who don't understand the stochastics or poo-poo it, making a big mistake. At any rate, so be a trader who watches what happens and is able to interpret it. Take a course, use your experience, paper trade for a while. If you are looking for some coaching, I'm available on a limited basis. Go to my site at timelessdollar.com, and I can give you either a half an hour or an hour on a very limited basis. You'll see my calendar. So that's it for the day. Monday, April 18th. Don't forget to get your taxes in today. I'm Marv Eisen of Timeless Dollar. Trade safely, use a lot of patience. Thanks for watching, and I'll see you in my next video.